Hey fellow traders. Today's video I'm gonna kind of divert a little bit from where I was talking about making my scalping video. I got to do a little bit more to get the material together for that. But I'm gonna go ahead and show you in this one on how I'm managing the trades whenever I get them wrong. And some of what I show in this video is also going to be kind of useful for scalping. Just about everything that I show, you can pretty much think of it as a tool. You don't really use a set one method or another, but we're going to go ahead and wrap up the series on how to win, showing in the long term. And if you're not subscribed, make sure you hit that subscribe and bell so you can get when new videos come out. I'm a little choppy about my schedule right now, but still working on trying to get something in regards to freeing up a little bit more of my time. I've had to kind of divert back to being busier for just a little while longer. So just bear with me. I'm going to keep the videos coming. And let's go ahead and get into this one. So basically, the idea behind what I'm doing with the risk management part, I'm not actually stopping out. I'm not even using a stop loss at all. And what you're going to need to do first is actually determine some levels. I've shown a couple of other videos about how to do that. There is one other kind of method that we could use to determine that, and I'll go ahead and show you that starting out with this one. We'll go ahead and pick another pair. Let's see, which one should we use? Sure, why not? We'll go with that one. Yeah, that might actually kind of work out. Let's see what we got. Okay. Now, one of the things that you are mainly going to be concerned with, first of all and foremost in most cases, is how much money are you willing to risk on a single position. So in most cases, I know a lot of people like to use a set distance stop of 25 or 30 pips. For example, if you were trading the CAD or the Euro, and that's basically going to give you a set risk limit that you're kind of used to trading with. So what I kind of advise, and this kind of makes it a little bit simpler, but it kind of helps to see it the other way first, so you kind of understand everything that we're looking for and what we're looking at. But what you're going to want to do is take your risk amount and calculate that based on your distance, and then you're going to find, let me get the right one up here. There we go. I've got this linked on TradingView if you'd like to grab a copy of that. Okay. Single column. It's good. So I'm going to go ahead and set this up on the example of 30 pips or 300 points because there's 10 points per pip. And I'm not going to worry about the stop or the R ratio. We're going to kind of talk about that here in just a moment. But you can use this calculator or any other calculator actually to set up what you're looking to risk. So in this case, the stop size would be 28.22, and are we doing, yeah, we're doing automatic lot sizing. So if we were using a 0.13 and risking, so we might want to do not include commission. Let's just say 1%. That'll, no. Let's just do it this way. We're risking 25. There we go. So we would use a 0.11 if we were using a 30 pip stop. And that would give you our risk. So that would be kind of a standard way to work things out. So now what we would do for the second part is we would find our most extreme level. So we're going to do that in the same fashion that we were talking about in the previous video. Make sure you check those out. And then from here, once we've determined where that level is, we're going to actually take double our stop size of what we're willing to risk. So if we're looking to risk a 30 pip stop, then we're going to try to find our next level at or beyond that range. So we're going to mark out 60 pips with our measuring tool, and then we're going to measure from that line and make sure that the next level of support and resistance that we look for based on our criteria is kind of in that range. So that would put your next level that you're looking for here. And then you're going to still see kind of that similar pattern that we've kind of referred to and I've pointed out. Now you're going to notice there's some other little smaller levels in here. You're going to just ignore those. Just ignore them. That's all, because you're only looking to trade near these levels. So you're not trying to hit every turn, every little piece of noise, so on and so forth. But from that point on, you're going to try to find that next level at around that area or a little bit beyond it. So in this case right here, I kind of noticed there's some sharp points going here to there. I would actually kind of wonder if it would be better to start from there and move our levels up. So sometimes you could look at it in this regard. Usually starting from the most extreme kind of works, but also at the same time, if you're working with these points, kind of like I pointed out, sometimes they may line up a little bit better. It looks like these are going to line up better by using those points. Even though we have kind of a top level here, I might actually put a line there and kind of work with this here. So in this situation, I might consider trading here, or I might just consider eliminating this level, making the level there, eliminating that level. So you can kind of flex it a little bit, but most of your areas are going to line up in pattern. But because we have that extreme there, I would probably say that's just going to be a little bit wider than normal and put the level about right in there. So we'll kind of split the difference there. It kind of lines up, kind of doesn't, but it's pretty close, and close enough is actually good enough for this system. You don't have to be perfect, because what we're going to be doing with these levels next, if you were to use the stop loss for that, you would use it on the 1 to 2 system, kind of like what we talked about in the previous video. But I'm going to look for these levels based on our risk criteria. We're kind of lining up again there pretty well. So I think making that decision to just kind of leave that one a little bit wide and then look for a pattern here, I think that fits a lot better in the system. You have the huge reaction from there. But you'll just kind of mark these levels out on pattern and go ahead and plot your next possible all-time high. Just go straight from that one, even though it's off a little bit. So in this case right now with the CAD, I would probably just assume, seeing as how it made a double top there, I'd probably assume this level isn't going to hold. And then on top of that, you're going to be retracing. And this is kind of the whole idea behind risk management. So in this case, if we're using a little bit bigger stop size and we still wanted to put the same amount between them, we would actually be looking to trade with a 0.05. So if we opened a position short at 0.05, for example here, and actually we can do this, it may actually work a lot better. So we do know that this is going up and we're set up with those levels. And let's say, for example, we were back here. And we're taking a look at this, and we don't know that it's going up. So what we're going to do real quick is just kind of say, okay, we're kind of following a downtrend line. We're lined up here. Let's go ahead and set our proper size and sell. Okay, so it's not exactly going to be an exact one-to-one translation, but let's see, what is the pip value? 36.5. I kind of wish you could convert. Let me see if I can do this real quick. No, okay. We do. So this is like 7 cents per pip at one, so about 70 cents per pip in US dollars. 71, 72 cents in US dollars. Take the 36.54 divided by 0.05. So let's see. Yeah, we should be about 72 cents per pip. And then what's going to happen next is if you're wanting to manage this, the whole idea is normally in most trades you would look to be getting it right immediately from the start or somewhere around where you enter that trade. So in most cases, most standard examples, you would just expect this to go ahead and react down. If it starts going up, normally you would hedge. And the way I've been doing it, and what I've been finding results wise, it's actually a little bit easier to not hedge at all because of a situation similar to this. Like say it was breaking that level, you bought a hedge. Now it starts to fall back down where you could have potentially, say you had this position, you entered here, and say it comes down back to here. Well, instead of being trapped here, you can close out this position because it looks like it might reverse and then go long from there. And then you don't have that holding you up there, is what I refer to as kind of a trap situation. You could also end up with it there because you see the level is breaking away. You could have bought the top there and then gotten trapped here just when you took a sell here, and all you had to do was wait a little bit longer and it made you correct. So it does kind of work either way, to where if you're looking at it on a monthly basis where you're coming out to about a 17 to 23% return, it's just that half hedging is a little bit easier. So if we do get this wrong, instead of stopping out or instead of trying to hedge up, we're just going to let price go to the next level. And then what we're going to do is once price reaches that next level, we're going to try to target level to level. So we're going to try to set our target one level ahead of where our position is. So if we went short here, we want to target here, should that ever come about. So that's where we would be looking to actually come out of this trade. That should be, I think, about $25. Yeah, it should be $25 based on our calculations. So now, when price gets to here, I can't exactly do it in the replay mode specifically without using some other tools. It won't let me do the limit order, I don't think. No, just a horizontal line. Yeah, I kind of wish they would let you put in a limit order with the replay. But let's see if I can get it to that line to where I can buy it without it blasting completely through it. And the whole idea here is to kind of show you and represent in kind of easy terms what the actual drawdown is going to look like. Because in this case here, let's say you were getting this wrong and we had that position in here, which I was trying to kind of show you a little bit. whenever you have two positions, you will actually have an average position that is actually half of the distance between both positions. That will actually equal $0. So in this case, if you were getting it wrong, the management idea here is to take an additional short here, which would put your position average, your basket average, right in between these two levels. And then as price come down here with this red bar, you would exit that position at no loss. You possibly wouldn't get any gain, but it's much safer to take a 0 loss over trying to get greedy and fight to that level. Because at this in this situation here, I would potentially think it was going longer, or actually going shorter to come down to here. But if you were playing it safe, especially if you're trying to grow a small account, it's much better to just come out at 0, wait and see what's going to happen at this next level. And I haven't quite got that yet. Let me see if I can. There we go. So now notice when I sell, notice how it brought our average position up. So now this does bring up our point value to a bit higher amount. So what we would actually be working with in this case is now a $50 of additional risk. So once we get to this level here, we're down $25 here, but then we still have this position plus this position. If it goes wrong to the next level, we're actually going to be, where'd my paintbrush go? So our first level, -25, that's our original risk. And then the second level, you're going to have a -25 again, because it's on the pattern. And then we're going to have an additional 25 from the second add-on. So we're going to make a loss of 50 in that instance. Plus this 25, so we'll be down a total of $75 at that point. But now, if price travels up to here, comes back down, it needs to come halfway between all three in this case. So if price comes up, travels back down, this area here is now your break even. Now that it's a little bit higher drawdown in this case when you're running with 3 positions, but it still gives you that advantage of pulling your basket average, your break-even point of all positions, to the center of everything. So once you get up and price goes even further, typically at this point I would like to hedge, and then I would follow different ways of rolling out of that hedge, kind of along the path of what I laid out in the hedging series. So then I would swap to using those type of techniques to try to prevent any further drawdown, but get out of this kind of using the same ideas where we're trying to close out more of a gain than what we do in loss to try to shrink the size. We could only just close out what's in gain and then try to re-hedge if we get that wrong. But the main outcome of what usually happens in this strategy, so far at this point, I haven't reached a point where I've had to reach a full hedge yet. At worst, I've been to the 3rd level, and I'm actually in that in Bitcoin now, and we're kind of into our 3rd month of doing this strategy. But normally, the whole idea is, instead of trying to get your trade right from the short in this area and just constantly stopping out or waiting for price to come back all the way to here, which may not happen, but it's very likely it could retrace at least half of the distance it went up. So that's the whole advantage to using that in, and then you don't get trapped trying to guess both sides. You're only working one side at a time, so it's a bit simpler. But instead of trying to catch where it's going here and stopping out to try to get that risk reward and try to get a recommended way of trading and try to basically get it right all the time, which ultimately is the best thing to do, but is clearly going to be an impossible endeavor. Instead, now you're trying to catch this turnaround as it goes and gets worse. You can actually move your position gradually to keep up with it. And basically, all you're really worried about in this situation is how bad is the drawdown going to get. But now when the market does finally turn, let's say it decides to come up here, and what plays out over the next few weeks, it does actually start going down and tries to come back and retest this trend line or something maybe, or just get some type of reaction, or just because that's an ultimate top, it's going to make a double top and start retracing. There's numerous different ways this could go. And instead of trying to say, oh, it's going to turn here, 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 now you've given yourself this entire range to turn in. And so instead of trying to hit this turn in 30 pips, you can actually try to hit this turn, if I can get a hold of it. Now you've given yourself 155 pips to come out ahead in this trade. So instead of trying to lock it into a set area and lose and get it wrong multiple times, over and over and over again, trying to guess where this reverse is, you can say, oh, well, it didn't happen there. Well, maybe it'll happen there, but it's still on. Maybe it'll happen there. And eventually, price, as we know, does not just go in a straight line forever. And by using the wider levels and using that method of approach to try to use a wider distance, then the more opportunity you actually give yourself to get this right. The only drawdown is going to be just that, your drawdown. So as we play this forward, we've got a position here, remember, and here, and we're going to add a third position here. And then if it keeps going, we're going to try to wait for price to come back to here. We're going to let it clearly break away and see if it'll come back here. And then we will decide to hedge, or if we're getting some other kind of indication that maybe we may just need to hang on a little longer and it's coming back, such as a clear trend line break or some other method that you can use in price action, maybe some news. Everything is a tool. Never forget that. Every single thing is a tool, and a tool only. Use the right tool for the job, and it gets the job done. So once you have all that data in place, eventually this will come back, and once you reach this little spot here, you can come out clean, or you can opt to hang on and see if it will go further in and actually make some profit, all without taking any losses at all. Never forget, it's far easier to go forward as long as you don't go backwards first. And this gives you a very large opportunity to actually get this right. It just takes a little patience and a little drawdown tolerance. So just plan to have a little bit of distance drawn down. But if you're willing to tolerate that, if you're willing to risk it, it is certainly easy to make it, because if you actually get all the way up here, it starts to turn finally, you add in that third one. Let's move it forward some more. And you notice how our drawdown is kind of moving up a little bit faster. But now at this point, we're getting into the next area. There we go. See if I can sell it from there. Now look. We might be in quite a bit of drawdown at this point. So I think I was doing the conversion. Yeah, but we know we've got our calculation here. That calculation is correct. So at this point now, it will go up much faster. So we'll be going up at about $1 a pip. But more than likely at this point, we know markets don't continue forever. So we still have given ourselves a massive amount of room. So if this starts to come back right, it only has to come back here and we can clear everything out. It's a very clear level right here. It's very possible it could come back and reverse over the next week from this area and start going higher. But that actually puts us in a perfect position to just be a little bit patient and let price come back, because eventually it's going to react down. So notice we're kind of making that double top. So had I hedged, what I would end up doing in that situation, I would probably want to close out my hedge, even if it's a small loss at this point. So I would actually take that off the table and make the educated guess that maybe it's going to reverse from this in-between level that we have here, because we're near that extreme high. So now in this case, our position break even was here. If we get it to down here, which is very likely, noticing how that's a very obvious level right there, and it's actually less than 50% retracement, which gives a very high probability of it making at least here. It's also very possible it could come down further, and once we get more price information, once it reaches that point, then you may want to make a decision. Do you want to come out? Do you want to just close the one that's in profit and leave the other two? Or do you just want to leave it all and see if you can come all the way back down to here and make a significant gain on it? Because you notice we were down $150, I believe. No, we were only down 75. But at this point, we probably would have gone down a little over 100. But if it does come back, because we risked 100, it is very possible we can make 100 or more just by that move coming back. So that will always work with the principle of risking it to make it. If you're risking only $10, then you really can't expect to make $100 out of it unless you're very good at making very long predictions and allowing price to travel extremely far. But by doing it this way, if you're willing to risk, $30 or $40, you can quite possibly expect to make at least $30 or $40. Everything kind of moves one-to-one in the market, so your risk is not going to suddenly increase unless you add more size. If you want to check out this calculator here, it's on my TradingView scripts page. Very soon to be redoing that a little bit to work with cryptos and futures and stocks, but I've got to try to condense that code and optimize it so it can run faster. But check that out. It'll certainly help. You can also go to any other Forex calculator or trading calculator and generally be able to find most of these pretty easily. I just like to use this because I can find all the numbers real quick just by punching in any other. It does all the algebra for me real quick, so I don't have to think about it much. So, but keep that in mind. So we would be, in this case, we lost 50 between here. We lost 25 between there, so that's 75 in total drawdown. Maybe about 100 at this point. Maybe even a little bit higher, 110, because this distance here would be $75. So if the price did travel to here, you would be 150 in drawdown, because then you would have the 25 3 times, making the total 150. But if you add it in again here, then that would make your center point right about here. So the more this goes on, the more likely it's going to come back fairly far. Usually, in most cases, it's about 50 to 60% chance it's going to make it somewhere in this area once it starts to retrace. So it's going to go somewhere between the 50 to 60% of that trend at a very high probability. Trying to come all the way back is a lower probability, so just keep that in mind. When you get extremely large, if you were to take a single trade off the top, you may consider holding down here. But if you've gone in like we did in the example and it's been going against you the entire time and then starts to come back, it's much better especially with a smaller account, to consider taking everything off the table, or take the top and bottom one off the table and leave the center one, because the top and bottom will cancel each other out. And this will be no different than opening a new trade. But if you close all three and then open a new one here, you're just paying commission and may get a worse fill price. So it's just a lot better to just do the top and bottom out if you can. If you're trading in the United States, it's recommended to use a different size on each entry if you're doing this. That way you can kind of control what you're going in and out of, because sometimes it may come down here but not quite, and you may think, okay, I may just want to close this position from the top, take that gain, and then put a 0.1 hedge against our lot size, because we were working with 0.5 on each level. So I may just want to hedge that there and see if price is going to go up there. And then if it does come down, then you can just take the gain from the position here and probably close that one at break even. Now you have the hedge here, but you can add in here. Your break even would come back to here. Then you can clean out and clean up everything once price gets a little bounce, and then you can completely roll out that way. So that's how you would manage these trades to keep your account moving forward without incurring a basically buttload of losses. And it's all just simply by managing that break-even point. So just to give a review, if you have a single pair of trades, so if you were going short in this case, then you were expecting this, but now you've got this. Your break even is going to be here. You enter short on both for the same size. Price makes it here. You end up at $0. Same thing here. If you get where price is going to continue up and not stop there, like in the case that we just looked at, and you go up to here and you enter a final position here, your break even will be the second entry for $0. And then so on and so forth. And if you were to go higher, even further to here, then your break even would be between the middle two positions, just like it was here. And so on and so forth, all the way up. And the higher it goes, the more drawdown you will incur. But the more drawdown you incur, also the more potential you have to win. And at worst case, the closer your break-even point will be. So if we go 600, 700 pips this way, then instead of holding that one position way down here and waiting for it to come all the way back, that 6 or 7, 800 pips, it only needs to come back 300 to 400. You could even add a little bit extra up top. So let's say these were 0.5, 0.5, 0.5, and then 0.1. You could actually have your break-even point a little bit higher up in this area by having a 0.1 here and a 0.5 here on each one. So easier way to stop that pencil. There we go. So do it that way. Now we've got to cooperate. So that is where it would bring that advantage to you. So that's all you're trying to do with the management. In a nutshell, you're trying to put this break-even point somewhere that is likely to be reached. So if we have it here, it's above this level, it's around this level, and it's very likely to at least come to that level if it comes down. So if our break even is here, all we have to do is give price a chance to get there, wipe it completely out, and then we can start fresh with a new long trade, or however we want to handle it from there. So I hope that kind of helps clear things up with the management part. and hopefully you can see kind of how that works. I'm going to start working on production for the scalping video next, and I've got to get Forex Tester 6 involved and back installed into this hard drive. And then I'll be able to kind of set up some examples that we can take a look at in a little bit better way than just TradingView. I kind of have to convert numbers around, and it's a little bit more difficult. But I will get that set up soon, and then we will take an actual kind of several different example situations to where you can see how this kind of goes in action. I've also got a few trades up on TradingView where I'm already doing this. I've got a Bitcoin trade that's already working with 3 positions in, so I'm keeping an eye on that. We just got a market maker involved, so I'm going to watch to see if that's going to make a liquidity run or if it's going to keep climbing higher. Right now, that kind of very much looks like a liquidity run to me. Was predicted on 69.6 to a buddy of mine the other day, where we might potentially see a very strong resistance point. Looks like we're getting that reaction now. So see if we hold this level here and start to drop. I'm kind of expecting what we were looking at for the CAD. We've broken that trend line, and we've been kind of pushing up and higher for a little while. We had a bunch of big news happening here with the Trump assassination attempt and so on. So it pushed the Bitcoin up pretty far, and then Trump announced a few other good news for buying into Bitcoin. There's a Senate bill in place where the U.S. is looking to buy 5% of the Bitcoin. So it's kind of driven some more news, but I have some other theories I've kind of laid out there. I'm just going to give it a little bit more time to see if it plays out. Current positions, I have one here short, I have one here on this level, and I have one at this red line here as well. So these are all the positions here, and in this case, notice I didn't add in here, but I added in up here. So when we're talking about our break-even position, I actually have a break-even somewhere about here on that. So if price does retrace back to this area, I will actually be around break even. Actually, I think it's just a little bit lower than that. I think it's about right there. So it's actually not on that second entry, but if I entered here, it would be down here. So sometimes even just waiting a little bit longer to put that on, instead of putting it on right away because we had a tip there, I kind of waited, it blasted through it. And okay, I let it go up a little bit higher, waited a little bit longer. Now we're starting to get some rejection, and that's why I went ahead and went in. There's also a level here, and price seemed to be holding below this level and in this area, dropping down a bit. So I hit the entry, and it kind of worked out until it was going great until it wasn't. And now we've got this situation here, which may have to be handled with a hedge, but I'm trying not to buy the top. If it so happens to turn out that way. We've got a lot of high targets, but we've got so many levels we have to break through first. And even levels that are not there, we're going to have to break through those first. I'm sorry, but we're not going straight to the moon like a rocket. The market does not work that way. Sorry. But I will wrap this up and get it uploaded, and I will see you guys in the next one. I'm going to work on getting the scalping video produced next. And look at, I may actually have to set up something in the Forex tester instead of doing just a live forward fix. But I'm finding it a lot more difficult to make a mess of this than I was intending, because I'm very tempted to do some things that I already know work, and most of that is all in these channels. I'm just kind of doing it by habit now. So it's like, if I know that all I need to do is this one little thing to swap it around and make it work, I do that one thing, and now, it's not going poorly. I'm only $150 down on it right now as of the balance, so it's not going poorly. So I may just have to set something up, and we'll go a different route with that. But basically, that'll just be numerous examples of how to roll out of hedges is what I'm trying to set up. So we'll just kind of work that through and see how it goes. But I will go ahead and end it here and catch you guys on the next one.